What's essential here is that when we started this project, we worked with DLA Piper for about 6 months to understand what were the specific conditions applying to financial instruments, where you issue them and where you distributed them. So we cover, I think, around 50 countries with them. And we build our compliance framework around that. So that's why when we say 180 jurisdiction, it's a lie because we didn't went that far. But you realize that when you indeed reach as many as 50, the rest is more or less the same thing. But our compliance framework allow indeed to issue digital securities and make them compliant in all those jurisdictions. What is relevant again here is the strategic partnership and a shareholder. Euronext, for those who do not know who Euronext is the largest incumbent in Europe. They operate in 8 markets, traditional stock exchange. And they've invested in Tokeny 3 years ago. They are absolutely slow movers, so I do not recommend that as investors. But they have a great brand, and they've opened a lot of doors, and they are finally waking up, so it's a good thing. They invested at the time of acquiring Borsa Italiana from the London Stock Exchange, so they really had other things to do than to project themselves into tokenization. But as I said, great company now, and they suddenly realized because of the legislation, DLT pilot regime, that the infrastructure needs to change, which is a great thing. Apex is the largest privately owned asset servicer in the world. They manage around 3 trillion of assets for 5,900 customers. Why it's relevant? Because they've decided to bring around 1 trillion of assets in the next 3 years on the blockchain. And this is exactly what this industry is missing. And you know, I'm in a small startups, so I love to promote this technology for fundraising, small companies, but the reality is it doesn't work. You need to be at a certain point of maturity of development for the technology to help you. Technology does not help, you know, early stage projects or projects that do not get traction. And that's, you know, sadly so, what a lot of people believe when we were doing those ICOs migrating to STOs. Well, STO is going to be the new ICOs. We probably had 20 customers sign up doing STOs and none of them successfully raised money. That's the reality of the facts. Inveniam is a strategic partner. Frank is there. You can talk to him after. It's an amazing company, and it's an amazing company because they have an amazing CEO that is bringing a vision, which is the reason why I'm here today. It's a vision about building an ecosystem. We cannot succeed by ourselves. This is still an early stage market, and we can take the approach of the winner take it all and try to go by ourselves. That doesn't work. I think this market is global. The barrier of entry is low. So we've been here in this business for 5 years. We build technology, we build an ecosystem, and I think this is what will make us successful. And Inveniam, Frank, and your team is doing an amazing job in building an ecosystem, and I know that there are quite a number of companies in this room and outside that are already part of this ecosystem. Did you know, well, in Europe, people, some of them know that the wide of road track in Russia is different than the rest of Europe. And they've done that because they wanted to prevent invasion. So because the train were stopping at the border and they could not continue. And in order to carry heavy gun and that kind of things, you need rail track, right? It's a counterproductive example because now obviously know that Russia is again at war. It served the purpose that it was initially created for, which is the counterproductive example. But otherwise, we would love to go by train to Russia. Right, without changing train, but okay, that's the reality. But the point I wanted to make is, indeed, before the war, that because of that, you cannot travel to Russia by train. So that prevents you, free flow of goods and many other things. Passengers could not happen in this country because of the lack of standardization. For those like me with gray hair, quite a few. So you remember VHS and Betamax, right? Okay. And there was another one. I was presenting in Holland last week, and a guy raised his hand. And why not Video 2000 made by Philips? Yeah, I forgot about that one. So there was also the Video 2000 made by Philips, right? Nobody heard about it. Actually, we had one. It's terrible because it was the cheapest. And my father, when they wanted to please us, so we bought one. He bought the cheapest, of course. And okay, well, whatever. So nobody knew about it anyway. So Betamax had a better standard than VHS, right? Everybody knows that. But it's the VHS standard that won. You know why? Porn. And don't laugh, okay, because I'm coming again. Yes, because the porn industry selected the standard to distribute its content. So point is, it's not about porn, it's about mass adoption. is you can have the best standard in the world. It's irrelevant because the market dictates. So you need to be ready to go where the market dictates. That is really the reality of what we do today. So where's the market going? And I will come to that in a second. Of course, it was a great innovation. And then 2 years after, nobody was talking about it anymore because we had the Blu-ray and the DVD. And of course, nobody was talking about VHS and Betamax. And now you're stuck with your tape at home that you try to convert because you shoot your kids with that format now. And you cannot watch the tape anymore. But the point is, even if you go with the best technology at a certain point of time, a couple of years after that, it becomes obsolete. So, of course, technology is super important, but not making an obsession. What I mean with that is potentially rely on companies that can deliver the right technology for you at the right time and focus on your business, right? So here probably it will ring a bell. In Europe, nobody knows. So I had several lives, and one was in the telco business. And those phones, if you remember those flip-flop phone, how to say, it was on a different standard called CDMA. And you had really two worlds. You had the CDMA world, where you had US and South Korea. So when you were roaming in South Korea, you had to rent a phone when you were arriving, and we were roaming in the US, we had to rent a phone as well, and you had to do the same thing when you were going into Europe. And the big difference between those phones and the GSM standard is that there was no SIM cards. So there was no SIM card. That means that you could not carry your identity with you when you were changing phones. And that's why when the GSM standard came into US and people start to understand that identity was at the core of everything going forward with those mobile phones, then the GSM standard prevailed and this standard disappeared, right? So my point here is identity is at the core of everything we do, whether we like it or not. Talking about the speech we had before of this politician. So identity is the core of everything. And I believe that this is the same for what we do here as well. And whether we like regulation or not, it happens that we deliver services in a heavily regulated market where we need to comply with those regulations. So why do we need standards? An issuer needs to be responsible towards the regulator. That's the reality of things. When you issue securities, the regulator cannot point at the blockchain for being responsible. It would be great, but they want to be able to put someone, I always give this example, the SEC wants to be able to come at 4 o'clock in the morning, knock at your door and follow me, right? They want to be able to do that with someone, and with the blockchain that doesn't work. So you need to be in a position to be responsible for what you do. You need also to be in a position to enforce the condition applying to your securities. We discussed today, Reg A, Reg D, Reg C+, Reg whatever. So how do you make sure that obviously you are complying with those rules? In a Reg A, for example, you cannot transfer your security for 12 months. How do you enforce that, right? And of course, you see where I'm going, because for those who were participating to my presentation yesterday, I was referring to several standards in the industry, at least for private markets and private blockchain, ERC20. ERC20 is like a Ferrari without wheel. It's great, it's beautiful, but it doesn't go anywhere. So if you want, and you can do that today. You can potentially use ERC20 today to issue your security. The point is, tomorrow, when there will be a lot of traffic on the highway, you will go nowhere. That's the reality of the standard. It's a great standard, as I said. You always learn from innovation in technology. And when Feigenberg-Vogelsteller, who's the guy that invented the ERC20, it was phenomenal because it was what enables to manage counterparty risk. The ERC20 that came with the ICO was nothing but enabling DVP, deliver versus payment. And that was essential because, of course, if you do those transactions on chain and those ICO, you wanted to make sure that you don't get the money, you don't send the money before receiving the token, the assets. This is exactly what it demonstrated. But the ERC20 is not permission. So if I send you an ERC20, you will receive it, which is great in a sense because it's doing what it's supposed to be doing. But again, taking this counterproductive example, if you're Russian and you're on a sanction list, I cannot prevent the token from going to you. It's impossible. If this token is in your wallet and I need to freeze this asset, I cannot freeze this asset. So if you think at all the conditions that needs to apply to securities today, you cannot do that on the ERC20. And you cannot do that either on a centralized environment. You need to do that on a decentralized environment. For the simple reason that if you do that on a centralized environment, that centralized environment becomes also the single point of failure for your whole infrastructure. Control transfer, this is the one I mentioned. Enforce governance. So if you have tag-along rules, how do you enforce that without control? allow new service offering. One of the things that obviously we look very much into is DeFi, what we can do with DeFi. We really believe that this is the future. But in order to enable DeFi, you need to operate on the same blockchain. Sorry to say that, but a lot of people are referring to blockchain interoperability. Blockchain interoperability does not exist. This is a lure. You know, if you go from Corda to Ethereum, for example, the only way to do that is to immobilize the asset on the Corda and to create exactly the same assets on the other blockchain. First of all, you need to make sure that you are creating the same terms and conditions. Secondly, again, your infrastructure becomes the single point of failure. That doesn't work. The only way to create interoperability is if you develop under the same programming language and referring to a public blockchain and Ethereum, you have all those EVM-compatible blockchains that are now using this programming language, and that makes this whole ecosystem work, and that can enable DeFi. And guarantee asset integrity, well, I don't have to explain that. You remember this use case of the guy, you know, that has Bitcoin on his laptop, and whoever threw this laptop in the garbage, and it ended up in this garbage land in the UK, and he even paid, he proposed to pay 20 million to clean up the garbage tank, and the mayor refused to do that. But that demonstrates the limit of having a non-permission token, meaning that if you lose your token, you lose also access to your assets. And this is, again, something that the regulator will never accept. That's exactly the reason why we have custodian. The role of the custodian is to guarantee asset integrity, right? So how do you do that? So, and this is where the exciting part comes. Standards, way! So, standard at blockchain level. Well, as you can see, I'm not holistic on private and public blockchain. You know, I really have holistic people in my team. But for me, as I said, it's all about where the market goes. In the beginning, I have to be totally honest with you, we went on public Ethereum because we had not enough money to do something else. So we decided to focus. We could have done on different blockchain. We were paid by Tezos and others to develop on the ecosystem, and could have been very tempting. A lot of companies did that. But the moment that you do that, that means that you have to deploy your smart contract on multiple blockchain, and as there is no interoperability, then if you want to provide that service to your client, then you become the single point of failure. And as I always say, you know, the most important person in a company is not the CEO, it's the compliance officer, and if he says no, it's no, right? The CEO will never go against the compliance officer. And I have a hard time believing that those large financial institutions will say, you know, guys, you are 5 years old, 20 people, great, I'm going to give you $1 billion of assets. That's not going to happen, right? You cannot be a single point of failure in this industry because you will simply not pass this smart guy being the compliance officer. So that's why we developed initially only on public Ethereum, with the belief that the problem of Ethereum, because there were a lot of problems on Ethereum in the beginning, you know, the congestion fee, the gas fee were super high. Everybody's saying it's not, you know, clean for the planet, etc. But when you have 340,000 developers, which is the numbers of people developing on Ethereum versus around 1,000 people on Corda, that gives you an indication of the size, right? You know that those problems are going to be fixed, just a matter of time. And as the Ethereum community was not going fast enough, then you had private company, Polygon, Avalanche, and others that started to develop what we call layer 2 blockchain. So layer 2 blockchain are side chain, where basically they are the consensus layer, where the layer 1 is the execution layer. And they came with those EVM-compatible blockchain that obviously remove completely the problem of cost, congestion, etc. And all those are built in Solidity, and therefore they're all compatible. So you really reach an ecosystem, and this ecosystem is growing really fast. I mean, Polygon now is getting an amazing traction that gives also show the power of the blockchain as well. I'm sorry to say that, but when we were talking about India, very often we were talking about low-cost developers. Polygon is based in India, and this is one of the leading companies with regards to the blockchain. So this is definitely changing the image of India in terms of a country for developing and bringing innovation. So we believe that all this ecosystem will be really driving the way forward for this industry. And I have to tell you, I was talking to Citibank, you know, 3-4 years ago. They were saying public blockchain on my dead body. Probably the body is dead today because now they're starting to talk about public blockchain. They go smoothly, right? First Hyperledger, but no, okay, behind the scene, can we do something on public blockchain? So we're going there. There's no doubt about that. And even the problem related to transparency and data protection, there are solutions that exist on EVM-compatible blockchain. So this is just a matter of time. As I said, when you have so many people developing, those problems will be solved. It's not me saying that, it's Ben Horowitz who said that, of course, you know, any innovation comes with shortcomings, And he was giving this example of the phone. In the beginning, you didn't have the smartphone that wasn't that size, if you remember. It's quite a different size. But it always comes with something that is unique. And as a side note, for the phone, it was not the fact that you could make phone calls. He said that what made it different was the camera. And here, of course, what makes this different is the trust. We had a nice presentation early on that. The trust is really a game changer for this technology, and this is why, of course, it will prevail. But it's important to pick up the right blockchain, I think, and bet on what is coming and being the future. Now, on the standard, I was explaining that yesterday. So we build this compliance framework based on identity and based on a standard, which is, in essence, a ERC20 open source that we've just put on steroids. It's a big word for replacing the transfer function, but it is what it is. So we replace the transfer function, and instead of that, we put around 8 smart contracts. Not one, it's 8. There is a master contract, but that means that we have also the possibility to change the smart contract without changing the master smart contract if there is something that needs to be upgraded in the security. But we can basically compile in those 8 smart contracts all the rules of compliance that exist with securities. So that means that you are in a position to guarantee to the regulator that you will always be compliant with the security law applying to your assets wherever they are issued and being distributed. And we do that with identity because, again, if you only whitelist wallets, I can give you my private key and you will have access to my assets, or you will even have the ownership of my assets without doing KYC. So at a certain point of time, this will be a problem. Also because we believe that it was not the wallet that is driving the future, it's the identity. On identity, you can have multiple wallets. People will have multiple wallets. Firstly, because there are a lot of companies providing wallet to your client. Vertalo is providing wallet to their clients. So at a certain point of time, people will have multiple wallets. So you need to have a single place where those wallets can be kept. And by using a smart contract on-chain to host those wallets, then you have basically a solution that enables to address all those needs for investors. More importantly also, we think that it's important to use identity not only for investors, but for the market participants. Today, you have paying agent, custodian, transfer agent. All those people will not disappear tomorrow, simply because the law will not change. The law is what it is. If you take in Europe, for example, MiCA said this is the definition of a digital asset, and that excludes securities. Why? Because they are law applying to securities, you just have to follow those rules, right? So it will not change. So the role of the custodian will not disappear. The business model of the custodian will disappear because it will be very difficult to explain that they are going to continue charging asset under management fee to keep the assets that are not on the vault but on the public blockchain. That's not going to work anymore. So obviously that's why they're all stepping into this business to continue having those revenue as long as possible. But the reality is that on one side you have those super expensive digital custody solution. On the other side you have MetaMask. So at a certain point of time, the reality will be in between, right? But identity enables also to assign specific roles to those third parties to continue operating on those assets on your behalf. Think about, wealth manager. Those wealth managers, they need to be able to take action on your assets. If they do a recommendation, how are they going to be able to take action on your assets if they don't have access to it? By you giving them the private key, that doesn't work. How will the custodian be in a position to recover access to your assets? The issuer cannot do that. That's the role of the custodian. Legally, he cannot do that because otherwise, he can steal the asset from his own investor. Don't laugh. There was a customer in Georgia that asked me whether it was possible. So this is the reality. So we need to have a mechanism to enable to do that, and we believe that with identity, we can indeed do that. As I said earlier, all this is on chain. It's on GitHub. Those are smart contracts available, open source to everyone. So what we want is to build a standard, because if we don't have a standard, we are going to recreate silos. And those silos will prevent from achieving that. That is our view on liquidity. Liquidity, and I have a lot of respect for all those ATSs in the market. This is great, we need that. But liquidity will not happen on one single ATS. Simply because, as I said yesterday, if you look at the numbers of assets that will be tokenized and compare that with public market where there is liquidity, the numbers are different. 2,000 securities on Euronext, 8 stock markets exist for 150 years. And they have liquidity, instant liquidity, because there is an ecosystem. In private market, you will not have instant liquidity. You will not have liquidity overnight. You will have indeed a solution to address illiquidity costs. Those private assets are highly illiquid, so you need a place where you can find a counterparty, negotiate, and have the best deal for your assets. But you will not have a counterparty acquiring that overnight and do an automatic matching of an order because there will simply not be a demand. As simply as that. It's not possible. So we need to create bridges between all the liquidity solutions that we can find in the market. We've ourselves started to develop what we call a bulletin board, which is nothing to compare with an ATS. It's just a place where investors in the same product can share intention to buy and sell, because the reality is that a lot of people are selling between themselves. So you have a simple solution to do that. Of course, it's not sufficient. If you don't find a counterparty, where do you go? Then you need to have a standard that allows you to access those ATSs and access more liquidity pool. And of course, those liquidity pool will be coming from regulated market infrastructure. OTC platform, we should not exclude that when this market is going mainstream, there will be OTC, non-regulated platform. There are huge numbers of broker-dealers that will contribute to liquidity. Crypto exchanges, Binance is opening a company in France. They are applying for a digital security license. BitMEX is just acquired a bank in Germany. They are also going to deal with digital securities. So they have huge customer base. So of course, they will have a problem with KYC, but that will be solved, I would assume, in a couple of years. Probably a bit more, but nevertheless, they have huge customer base, so that will contribute to liquidity pool, and also DeFi, because I do believe that DeFi is the future for many reasons. It will not necessarily bring what we refer to liquidity, but collateral pledging assets is something where we believe that there is huge opportunity, unlocking potential value for those investors that are locking the assets in product that already are bringing great deal, but if you have low interest rate, you want to use that to get more cash and invest into those great markets. And this is something that obviously those actionable assets, so-called tokens, will permit. And this whole ecosystem that will bring liquidity. It may take a bit of time, and first we need to start with quality assets, because if we bring shitty product, shitty company, nobody will invest. That's the reality. So we need to really start bringing good asset, convince asset managers, go maybe for a bit more mature company. I mean, I was talking to a gentleman that is placing SpaceX stocks in private markets. So of course, if we bring that type of company, or your company in that market, they will be investors. Investors are not stupid, right? So they will go and buy quality asset. They will not go for the shitty product unless it's friends and family. That's the reality. But so we need to bring quality asset, and when we'll have quality asset, then we can have liquidity. But it will happen because we're creating an ecosystem, company like Texture, like Oasis Pro, like others that are going into this ecosystem will address this liquidity opportunity. That's it. I assume there is no question. Please do. Sure.
So how soon is all this going to be?
Oh, this is in production. We have more than 100 customers, 28 billion of assets on chain, and we are in the process of implementing Apex transition to digital assets. So we've been working on this for the last 5 years with a team of 30 people. Now we're 50 people. It's live. It's in production. We can demo it. We can implement clients. We have, thanks to our partner in Veniam, we have customers in the US as well. We have support in the region as well. So yeah, obviously for us, the big move will be coming from large financial institutions because they have the volumes. It is a volume business. Whether we like it or not, it's a volume business. So we need to have a large number of assets for a company like us to make a living out of that. So for the moment, we are of course losing money, but we had to project ourselves into a volume business to come with a pricing level that makes sense. When we're doing the ICO, we were charging 100,000 euro per ICO. This is ridiculous. It was good for us, but it is ridiculous. And people were paying that amount of money because they thought that they're going to raise 20, 30, 50 million. So there was not a problem, right? They had cash flow issue of course, but other than that, they were willing to pay that. Today, it's a couple of €1,000 to tokenize asset, not more than that, but you need to bring volumes. And that's why we want to make this a standard, otherwise we'll never achieve those volumes.
So if I have a security in Europe that's currently using Apex as a custodian?
It depends on the type of security, because first of all, let's make the difference between a custodian and a transfer agent. You don't have the obligation in Europe to have a transfer agent based on the type of instrument. For a fund, it can be a fund that indeed requires a transfer agent, or they use the service of a fiduciary company that manage basically the cap table and print the paper and put it in a drawer. So it very much depends on the type of instrument and where you operate. In the US, you need a transfer agent for most of your security. You don't need that in Europe.
Is there a primary market and a secondary market? Just tokenizing assets and throwing it on chain?
No, not at all. So most of our customers are The early day customers were digital marketplaces, mostly related to real estate, so it's primary markets.
So you can raise capital?
Raise capital, let's be honest, there's very little secondary market today. First of all, because the infrastructure are nascent. Secondly, because we have poor type of assets, so cannot have really that. So the secondary is building up. I think there's a lot of work done by companies that have applied for licenses, they're building the infrastructure. So this is still early stage, no doubt about that, but it doesn't prevent from giving the benefit of digitalization. You already, even without secondary market, bring that advantage to your investors of having this digital user experience and allow already with basic solutions that are non-regulated to create some discoverability. You would be surprised the number of SPV that we are dealing with that are just vehicles that are being used to invest into private companies. And those guys, take the example of Revolut. Revolut has been postponing his IPO for the last 4 years, right? So you are stuck with your investment. So if you need cash, where do you go? So there is a market existing over the counter for that you can leverage the benefit of digital securities.
Thanks so much. Sorry to cut you off, but...
No, I know.
It's good. If there's any questions, please feel free to reach out to him. I'm sure he's ready to answer all the questions.